I really think the dollar is going to collapse against Bitcoin. I really think Bitcoin is going to reach gold parity in the not so distant future and then surpass gold, as it is far superior as a money, as a thing to acquire, to save, and later exchange for the things that you want to need in your life. I don't measure Bitcoin dollars as much as I do Bitcoin gold. We're still below all-time highs. We haven't even gotten started. We have not even gotten started. The party is just about to begin. Policy is to debase the dollar, inflate your way out, default through inflation. Bitcoin is the only ticket we are all sold. It's the only exit door we all can walk out of. And I personally think, I'm getting very excited, it's really heating up. The temperature is getting warm. I think Bitcoin is going to go nuts.
The cracks in the dollar system are becoming too obvious to ignore. Jack Mallers, founder and CEO of Zap, says nations like China and Russia have already started shifting away from the US dollar. They're mining Bitcoin, but for now it's not at a scale their central banks can rely on. Instead, they're leaning on gold, rebuilding gold-backed trade networks and reserve systems that bypass the dollar altogether. That shift, Mallers argues, signals something profound. The traditional demand for U.S. debt, the very backbone of America's financial dominance, is evaporating. For Washington, the options are grim. The U.S. can either print money to inflate the debt away or embrace austerity and risk a brutal depression. History makes the likely path clear: printing and debasement. Mallers says that decision puts Bitcoin in the spotlight over the next 6 to 12 months. If the dollar keeps bleeding credibility, if inflation remains sticky, and if investors lose trust in U.S. policy, then Bitcoin becomes the alternative, not just another asset, but the escape hatch. Some analysts already argue the dollar looks like an emerging market currency when measured against Bitcoin. Mallers takes it further. Over the long run, Bitcoin has the potential not just to match gold but to surpass it. Gold may have been the dominant store of value for centuries, but Bitcoin is more portable, verifiable, and absolutely scarce. In a world losing faith in fiat, that combination could make it the ultimate monetary anchor. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
My message is find Bitcoin. Distributed, fair, inclusive, equal technology. Get out. Get out. They're building a neutral reserve system. China and Russia are getting out. They mine Bitcoin. Bitcoin's not big enough yet for their central banks to be buying in any significant size. Who knows? Maybe. They're very clearly remonetizing gold. And we're living in this multipolar world. The demand for U.S. debt from these folks, it's gone. It's gone. Even using US dollar payment rails, they're building gold-backed rails, gold-backed system, neutral reserve system. And I mean, guys, I really, really think Bitcoin is going to be a big winner over the next 6 to 12 months, a big winner. The United States has to run this thing hot. They have to try and grow their way out. They have to debase their way through it. They have to. We're living in two separate economies. And the middle and lower class economy are getting demolished. They're getting crushed. They need liquidity. They need help. I don't think, because here's the thing, everything's fixable. Yeah. Could the United States go through some form of austerity? Could Trump just let everything collapse? Of course. And then everything, including gold, will have a really tough time. We'll go through something worse than the Great Depression. And then on the other side of that, Bitcoin will be a winner. All roads lead to Bitcoin. The point here is it could be grim. It could be bleak. They could, there could be world war. I think what they will do is what they always do. Print the money. Default through inflation. Default through inflation. It just couldn't be more obvious. Now, this last one I just wanted to show you guys. I thought it was interesting. So this is the US dollar to the Naira. Okay, look at the chart. Just look at the aesthetics of the chart. You see here before 2010, a little blip, a little bump, and then a little bump, and then a little bump, and then what looks like a massive one. Look at Bitcoin to the dollar. You see this little bump, and then these massive ones. You see these emerging market currencies collapse against the strong ones. This is the Naira collapsing against the dollar. It looks the same here. The dollar is an emerging market currency against Bitcoin. I really think the dollar is going to collapse against Bitcoin. I really think Bitcoin is going to reach gold parity in the not so distant future and then surpass gold, as it is far superior as a money, as a thing to acquire, to save, and later exchange for the things that you want to need in your life. I really think this is the story, guys. I really do. And this is the last slide. I mean, when you look at gold and Bitcoin, I mean, Bitcoin's vastly outperformed gold, and I think it will continue. And so when people say, is the bull market over? Jack, we've reached the top. I don't measure Bitcoin dollars as much as I do Bitcoin gold. We're still below all-time highs. We haven't even gotten started. We have not even gotten started. Party is just about to begin. Policy is to debase the dollar, inflate your way out, default through inflation. Bitcoin is the only ticket we are all sold, only exit door we all can walk out of. And I personally think, I'm getting very excited, it's really heating up. Temperature's getting warm. I think Bitcoin is going to go nuts.
Jack Mallers isn't mincing words. The dollar is being deliberately debased. He says the liquidity flooding the system has to go somewhere, and right now it's being soaked up by two assets, gold and Bitcoin. The logic is simple: if the dollar goes down, something else has to go up. Since 2020, the contrast has been striking. Bitcoin has left treasuries TLT in the dust, massively outperforming them in a world where bonds no longer deliver real protection. Gold has held steady relative to treasuries, and stocks have done their usual dance. But Bitcoin broke the system open by exposing just how fragile fiat returns really are. Even mainstream voices like Ray Dalio, once dismissive, now recommend holding 10 to 15% of a portfolio in gold as insurance. Mallers takes the argument further. He doesn't hold gold at all because he sees Bitcoin as the superior form of money, scarcer, more portable, and verifiable in a way gold simply can't match. But he's quick to add this isn't about going all in overnight. His advice is pragmatic: own enough Bitcoin to sleep well and still build the life you want. For some, that's 10%. For others, 50%. For him, it's 100%, but that allocation grew over years. It's a personal journey, and as people understand Bitcoin more deeply, Mallers believes they'll naturally increase their share. Let's get back to the interview.
I'm telling you, Bitcoin is the only ticket available for sale to everybody to get out. If you're listening to this podcast and you're a top financier on Wall Street, good for you. Good for you. You don't have to listen to the rest of the episode. You got it, bro. You figured it out. Good for you. If you're not, your way out is Bitcoin. This is policy. These are purposeful decisions. I'll put it to you another way. Their only way out is Bitcoin. Gold and Bitcoin are absorbing all the liquidity and constantly making new all-time highs and performing the best because they have to. The dollar has to go down. Something else has to go up. So their only way out is Bitcoin. Now, they don't think about it that way. They think about it as their only way down is debasing the dollar, debasing the debt, and effectively defaulting through inflation. A soft, long default, but the sooner you find the exit door, the better you'll be. There's now $7.5 trillion in money market funds. And this is just the level of liquidity that Bitcoin is going to see soon. When rates start to come down, this capital needs to find a new home, needs to find returns. The amount of money that is going to flow into assets that needs to find bonds are getting destroyed. Real rates are negative and will continue to be. We haven't even started cutting rates yet. The amount of capital will be immense. This is Bitcoin over TLT, over treasuries. I mean, guys, and look, here's the thing. You look at these charts. I've been in Bitcoin since 2013. I watched Bitcoin go from $50 to $1,300. And then Mt. Gox gets hacked, Silk Road got busted, all this shit happened back then. And then it went all the way down to 200. And the chart looked insane. Like the hockey stick up and the fall down looked crazy. Now, it went from 50 to 1,300 to 250. Then it went to 20,000. I was like, oh my God, I thought $1,300 was a lot for a Bitcoin. Holy crap. And then it went from 20,000 to 2,000 or whatever, 3,000. You see these little blips down here? Every single bigger run ends up looking like a little blip. And you can see since 2020, I mean, Bitcoin's been ripping the face off of TLT. Since everything broke in 2020. Now this is gold over TLT. Look at this, relatively stable until 2020. My goodness. And this is the stock market. Now, gold in the stock market looked the same over TLT. Everything broke in 2020. In 2020, a lot of shit broke. Now, Bitcoin is just a beast of its own. It's the pin that popped the balloon. Here from Reuters, Ray Dalio last week, gold is a shield for U.S. market risk. He suggests 10 to 15% of your portfolio should be in gold. I don't own any gold because I own the better version of gold. I own Bitcoin. My recommendation is own whatever allows you to be comfortable, sleep at night, and build the life you want to live. As much Bitcoin as that is. 10, 15%? Sure. I don't know anybody that understands Bitcoin and it's 1% of their portfolio. 5%, 10%, 15%. If you get it, if you listen to this show, if you're one of me, one of us, I mean, guys, Bitcoin's 100% of mine. But you have to be comfortable. You'll get there. It's a journey. It wasn't always 100% for me.
What stands out in Maller's argument is the inevitability he sees in this shift. The scaffolding that once held up the dollar-dominated system is showing strain, and capital is already searching for new homes. Gold remains the familiar fallback, but Bitcoin represents something different, not just another store of value, but a structural alternative that rewrites how money itself works. The pace of adoption may differ from one investor to another, yet the underlying theme is the same. Trust is leaking out of fiat, and it has to settle somewhere. Whether policymakers acknowledge it or not, the competition for monetary relevance is already underway, and the decisions made over the next few years could determine which anchor the world clings to. As trust in traditional debt markets erodes, will investors gradually rebalance into gold and Bitcoin side by side, or will Bitcoin's technological advantages ultimately draw the bulk of confidence away from legacy assets altogether? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.